In the bustling world of finance, digital lending has emerged as a transformative force, particularly in India. But the question remains, has the era of profitable digital lending companies finally arrived? Over the past decade, India has witnessed an explosion in digital lending platforms, fueled by increased internet penetration and rapid digitalization. These platforms leverage technology to provide a seamless borrowing experience, reaching underserved segments of the population that traditional banks often overlook. Indian consumers, especially millennials and Gen Z, have shown a growing appetite for quick, hassle-free loans that can be obtained at the click of a button. This demand has driven a competitive market, pushing companies to innovate and offer varied products: personal loans, small business loans, and buy now, pay later schemes, among others. However, competition isn't the only factor at play. The digital lending landscape in India has benefited from favorable regulatory frameworks. The Reserve Bank of India has provided guidelines that create a secure environment, balancing innovation with customer protection. These measures are gradually building more trust among consumers and investors alike. On the technological front, digital lending companies employ advanced algorithms and AI to assess creditworthiness, allowing them to extend credit to first-time borrowers or those without a traditional credit history. This approach not only diversifies the risk, but also taps into a large pool of potential customers previously unreachable by conventional means. Financial inclusion has been a driving force, but how does profitability factor into this equation? Many digital lenders have focused on scaling rapidly, sometimes at the expense of profitability. However, the tide is turning. There's a growing emphasis on sustainable growth models, driven by efficient customer acquisition costs, prudent risk management, and better unit economics. Many companies are now reaching break-even points, with some even reporting profits. Global investors have taken notice, with significant funding rounds fueling the sector's growth. Increased transparency and success stories are making digital lending an attractive proposition for venture capitalists and institutional investors. Yet, challenges remain. The threat of loan defaults, operational risks, and the need to constantly evolve with technology are ever present. Moreover, any regulatory tightening could impact growth trajectories. Despite these hurdles, the digital lending sector in India is on a promising path. So, has the era of profitable digital lending companies in India arrived? While it's still early to make a definitive judgment, the signs are encouraging. As companies continue to evolve and adapt, profitability seems not just possible, but probable, heralding a new chapter in India's digital finance journey.